The loan officers that we're attracting most, and the ones that you'll see joining here over the next few months, are ones that are, first of all, they're fantastic human beings, and they work for companies that also have fantastic human beings there. And those are the people that we tend to connect with because we're talking to thousands of loan officers a year, and we're looking for the ones that we genuinely connect with, and those people are good people and they work for good people. The problem is that those companies are bigger. They've added a lot of bureaucracy. It takes a week to get an answer on a small thing. If they hear no, they can't get those things done, and no one is talking to them about the market or how to navigate those things or helping them get better at their craft. And so they're sort of left kind of like numb through the whole experience. Like, oh, I like my regional manager. I like my area manager. I'm like, cool. How are they helping you grow your business? Crickets. How are they helping you recruit to your branch? Crickets. Right? And so what you have is all this infrastructure in these major companies that actually make it really hard to do anything, especially because those companies are not radically transparent the way we are at Princeton. So, I talked to one guy for a huge mortgage company, top 10 lender. He's like, I got to get out of here. I'm like, why? He's like, they're making all of these cuts to my branch, and we're profitable, but these cuts are, he used the word draconian when he was talking about the cuts to his branch. And I'm like, wow, like I know the people who operate that company, and that's definitely not who they are or what they want to be, right? He's like convinced, like, well, they must be selling the company. I was like, no, man, the market we're in is an incredibly difficult one to navigate. And if you saw their books and your branch, you'd probably be coming to the same conclusions that they are for what you need to do. Maybe not, but probably. The difference is they're not taking the time to share that information with everybody. They don't trust everyone with all the information. And your middle area manager, who's 3 levels removed from the CEO, doesn't have any more information than you do to help you understand that stuff or have that conversation. And so when you have all these layers of bureaucracy, and a lot of these companies, have kind of weak managers to begin with in that cycle. They were all geniuses over the last 2 years during the refi boom. But their weak leadership in the middle, or they're really mostly recruiters, and they don't do a lot of managing or value adding. Then you're going to end up kind of feeling disillusioned and left alone in this environment. I talked to another person who was like, "Hey, listen, I have an assistant on my team. I can only pay her $28,000 a year, and I had to fight to get her from 26 to 28. I know she's worth more. I can't even give her part of my compensation to give her more money. And by the way, I'm a $60 million producer." Making 100 basis points at rates where other companies are making, loan officers are making 150 to other companies. Now, she probably would have stayed there forever, but our recruiter was able to get her to have a conversation with us, and then another one, we're talking to her for a year, and suddenly she's like, you're right, I know it's not fair to the people on my team for me to stay here if the company's not going to allow me to compensate them properly or market value. And she happens to be right. We've run the numbers a number of times, and she has a ton of money she's leaving on the table that she could use to compensate her team. And her passion is helping other young women grow in their careers and get to where they want to go and establish themselves. She's got a woman on her team right now who can't afford daycare because she's underpaid, and it's putting stress on her and her team. And so those are the things that she's looking to do. And again, I know the people who run the company that person's at. They're really good people. But again, when you get to so much bureaucracy and you have these group decision-making things, and because you're not sharing all the information with everybody, you have to make these like group think, wide-ranging decisions. Or when companies start to cut costs, instead of using a scalpel, they use a sword. And so you end up having this sword approach, and everybody's like, well, that doesn't apply to me. And they're like, well, this is how we're doing it. Which, by the way, if you're an 8 personality type like me on the Enneagram, that's the worst words in the English language. Are like, if you knew what I knew, you'd understand. It's like, no, tell me, let me understand. I'm pretty smart, I'll get it, And so we've had to make a bunch of tough decisions here at Princeton, but we've done it by sharing all of the information with everybody. And you may not agree necessarily with every decision we've made, but you certainly understand where we're coming from, and you know the rules we're playing by, and you know what the company needs to do to avoid having to make more difficult decisions. And I think the collectiveness of that is, the result has been, while the industry's down 50% this year, on our retail team, we're up 5 or 10%. And that's been the difference for us, is being able to share that information with everyone so that we can make the right decisions as the moment comes.